Hi, friends. It is Jerry Kolich here from National Mortgage Center, powered by Stride Bank, and I got my good friend, my cohort, Jeff Newton here from National VA Loans, and I wanted to bring Jeff on today because Jeff, we're going to talk a little bit about non-QM loans, non-qualified mortgages. These are fun loans, right?
Oh, I love them. They're next to VA loans are one of my favorites. So
They
I
are.
love
They are. And the cool thing about them is they really open up the home buying market to a whole new group of people, and those people are self-employed, right? I mean,
marginalized.
yeah, it's like you should almost call these loans the self-employed loan. And so we're going to go in a little bit of depth today, not too much so you're bored, but so that you have a decent understanding of how these loans work, who they're for, and how you could potentially take advantage of these loans. But they're really focused on someone that has maybe an interesting way of calculating their income, if we can say that. Maybe they're taking advantages of all those wonderful tax breaks out there. And so if you got their pay stubs, their W-2s, their tax returns, it may not show that they're making, a certain amount of money, but you can see through other means that, hey, they're in a very, very profitable type of position or business. And so it's a great way that these borrowers can get into a home, right? To buy a home. So why don't we go ahead? You ready to kind of jump into this a little bit? I got a PowerPoint here that we can go through, buddy, and we'll see if we can drop some knowledge on the folks. What do you say?
That sounds good. Let's jump into the deep end. I like it.
Well, the first thing that I'll point out is the non-QM loans. We actually have our own division with InStride Bank, and that's a huge advantage, Jeff, when you're originating these type of loans, because in our previous lives, when you would do this, you're dealing with it on like a brokered type of relationship. And tell the folks, what does it mean, like when we're talking about a broker versus us doing this ourselves on the retail side of things?
Well, it's a really good point. I think it's one of the things that we need to highlight is when you're dealing with a broker's relationship versus an in-house bank relationship, it's someone else kind of has control of everything. You're at the mercy of at another investor or someone else that's telling you exactly the guidelines on how they're going to be. The non-QM division that Stride Bank and Stride Mortgage is put together here for us to utilize is based on our guidelines and our rules and the way we're going to do them.
Right.
So it just makes it so much easier for our borrowers to, what self-employed borrowers especially, to access loans and access money.
Right. The biggest pain point I would say when we were doing these before on a broker type of relationship is, like you said, you don't really have control of it. The underwriter doesn't work for your company. And so when you were trying to calculate the income, sometimes it would take, a day or two or even three to get back to you on an income calculation. And so it's so nice that, Chris runs, he's our head underwriter on the non-QM side of things. We have multiple underwriters, but it's so convenient to be able to send Chris a quick email and say, hey, here's what I'm looking at when it comes to income, whether it be bank statements or 1099s, and get that calculation for somebody that works at Stride. So that's one thing that I wanted to highlight as we get going into this. This is our own product. This is pretty cool. We wrote the guidelines, and it's our matrices that we use. So let's jump into it today. So, one of the big questions that we get is, well, are these subprime loans, because you're not using W-2s and things like that, tax returns, to calculate the income? 100% they are not subprime loans. And in fact, the data shows that these loans perform pretty much the same way that a traditional, conventional, or government loan, like an FHA or VA loan, right, that you deal a lot with. So they're
Yeah.
not subprime loans. Back in the day, when we were doing loans in 08 and 09, those were specifically subprime loans. They had terms, like, we remember the 228 loans, right? So you do it, it would have a fixed rate for 2 years and then it could adjust, or you could borrow 100% or more of the value of the home, or the credit score requirements weren't that stringent.
No, you
These
could
loans,
fog a mirror, you could get a loan, basically.
right? So these loans are going to have, some credit score requirements. They're definitely going to have some down payment requirements, and I think that's the big thing, is that you're not giving somebody up to 100% equity of the home. You're really having to put a down payment, and what you're doing is you're just calculating the income in a different way than Fannie or Freddie allow. Okay, so definitely not subprime loans. And so who is it for? Like we've talked about, it's really for, I would say, that self-employed borrower or investor. So someone who's looking to purchase maybe some investment properties, or somebody that needs you to look at their income in a different way. So the first thing that I would say, the most common one, wouldn't you, Jeff, is the bank statement loan. Okay. So a bank statement loan is exactly what it sounds like. We're going to look at either 12 or 24 months of your bank statements. And then we're going to calculate, based on the deposits in those bank statements, about 50% of that income, right? And we can use larger percentages, as it says there, a little bit, but this gives a self-employed borrower who, you can see these receipts coming in, you can see these deposits coming in, you can see the business is generating some income, right? But they're not necessarily looking at all the deductions that they may see on a tax return.
No, exactly. And like you said, these are for your self-employed borrowers. What we ran into and run into on a daily basis are self-employed borrowers that are highly qualified. They have great credit, they have assets, they have money in the bank. They're definitely earning money on a year-to-year basis. They have all the facets of everything you need to have a mortgage. But what they do is they utilize the tax codes and what you do as a self-employed borrower, and they just don't have what you need to be able to prove. That's where these loans really come into play for all our self-employed people.
Right. You can see their paper losses, right?
Yeah.
There's a difference between paper losses and actual losses. So, and then if you notice down here in the guidelines, we essentially look at the Fannie Mae and Freddie guidelines. We just use a different way to calculate the income, but everything else is really going to be based off of, for one of our products, Fannie and Freddie type of guidelines. Now, we do have some products that can get outside of the Fannie and Freddie guidelines, and we'll ask for some additional things for that. But the bank statement loan, great product for someone that's self-employed. And then for someone, we deal a lot with, say, real estate agents, right? Folks that are 1099, or maybe you have a painting company or whatever, and it's just you. We will look at, and I just closed one of these just a few weeks back. We'll just go off your 1099s. So give us a copy of your last year 1099, or we can go off 2 years of 1099s, and we'll look at that to calculate the income. So typically what we'll do, though, is we'll use just 90%, right? We'll use 90% of that 1099, leave out that 10%, and it gives somebody that's running their own business, or they're just, like I said, a real estate agent, or some sort of 1099 employment, great way for them to qualify.
That 90% is so big too. I mean, that's I hope everyone that's out there that's listening to this understands that 90% is giant. You think about your 1099 you get at the end of the year, whether you're a real estate agent or whatever your position is, and you make $200,000 or $300,000. Yeah, we know that you're writing that down. You're gonna write it down. You've got write-offs, you've got expenses. But if we can use up to 90% of that, think about that in your everyday world, and how much you can qualify utilizing that.
No, it's fantastic. The next one, really, that I think the public doesn't know about. Like, I wish I could scream from the mountain, because there's so many people out there that are wanting to accumulate maybe some real estate, right? Get some rental properties. The DSCR, it's a pretty new loan. I mean, maybe in the last few years, but I don't think enough people have talked about it. Essentially, what the DSCR stands for, like it says there in the first bullet point, it's your debt service coverage ratio, right? Essentially and it's just for investment properties, but essentially what that means is, Jeff, if you were wanting to buy an investment property and you go out, let's say that your monthly mortgage payment is going to be $2,000. We're going to look and see what would comparable rents be for that type of property. And as long as it's at 80% or better, you're fine. So let's use that example, right? As long as you can show rents come in at $1,600 or better, you can qualify for this loan without any income documentation. Let me say that again. Zero income documentation. We're just looking at what your payment will be and what the rent payment will be.
Yeah,
now,
louder for the people in the back. Absolutely, man. I tell you what, on the National VA side, we talk, one of the things that we talk to all of our veterans about is, how do you build wealth? Well, one of the main ways that us regular folk can build wealth is in home ownership, and is in property ownership and real estate. And so I talk to veterans all the time. Listen, if you are looking at potentially buying a property, or if you want to get into that where you have some rentals, or let's say you're stationed down. I mean, I just talked to a guy, and so Fort Hood just comes up, but stationed down in Fort Hood, and you're getting ready to get relocated to North Carolina. But there's a lot of military guys coming through Fort Hood, and they need places to rent. You could buy a property and have that rented out. they're paying your mortgage for you. You're taking care of your veteran partners, your veteran brother and sister, but they're paying that mortgage for you. You're building equity in it. And this DSCR loan is perfect for that, man. It's
It's
perfect.
perfect. And here's a great example down here. So your monthly mortgage payment is say $2,500, and your rent payment that you're going to receive, I should say, is $2,000. So you're at a 0.8 ratio. We can do that loan. No income required. That's all we're going to look at to calculate it. We're not going to look at your liabilities. We're not going to look at anything else. Just, hey, how much rent are they going to receive to wash out that mortgage payment? So if you are an investor out there and you have additional questions about this, please get in contact with us. 855-699-1424 is our number here at National Mortgage Center. It's not talked enough about, Jeff. And especially with our real estate partners, we got to let them know even more about this loan with some of the investors that they work with.
You know, we've got a couple guys here that work at National VA and Stride, of course, and you know they do investment and they have investment properties and they utilize this loan as well. It's that it. I wish, like you said, I wish we could shout it from the mountaintop or take a blimp and fly it over the country. Maybe we got to have a Chinese weather balloon to do that. I don't know, but you know, if we could, I would, because it's such an underutilized loan that's in the market. And the what we've created here at Stride Bank and National Mortgage Center is pretty damned amazing, and it's going to, the more people that know, the more people are going to take advantage of it. The more people are going to be able to build wealth and have a portfolio of property where they see an additional cash flow. And guys, cash flow, that's what we talk about a lot. Also, is cash flow. Cash flow. It's not about it's about the money that you got coming in every month versus the money you have going out. And if you can add property to your portfolio and have a greater cash flow, man, you're just in a great position. And if you can do it easy and all right in house with us here at Stride National Mortgage Center, what better way to do it?
Yeah, we always kind of say, look, you're going to be paying somebody's mortgage, so you might as well not only own a home, but if you can have somebody paying off your investment property, because maybe they're in a situation where it's best for them to rent right now, and they can be paying down a good portion of your mortgage payment or the whole thing. It's fantastic. And the other thing I want to highlight here is this number 4. You can actually close this in your business entity. I know that's a lot of times a question that we get from our investors is, well, do I have to close can I close in my business name? If you're going in the traditional Fannie Freddie route, no, you got to close that in your own name. But with this non-QM loan on the DSCR option, you can close in your business entity, which is a fantastic option. And then really the last one here is the asset amortization type of loan. So basically what this is you can use your assets to qualify. And typically we will use 84 months, which is a lot better than if you go to the conforming side of things, because I believe that's 240 months as they'll look at.
200, 240. It's crazy. I mean, when we rolled this product out, I'm like, oh my God, 84 months. Are you kidding me? I can't. I'm looking back on all the loans that we could have done if I would have had this program available to me. And it's just amazing. 84 months over 240 is absolutely crazy.
Yeah. The example, you have $500,000 in an account here. We're going to use 80% of those deposits. So 400,000 at 84 months, we're going to use $4,700 plus in income for you to qualify for your potential home loan. So I just noticed this one. I didn't see this one on the meeting the other day. Crypto, baby. We'll use 50% of your cryptocurrency. It's here. It's coming.
Heck yes. Heck, if you own Bitcoin, call us. We're proud of you. That's awesome, especially if you bought it when you get it for less than $1 a coin.
Okay.
Actually, if you owned it for less than $1 a coin, you're probably calling us from your private island. But that's okay. Call us anyway.
Yeah, you're probably flying in your private jet to your private island. But anyway, man, as we always say here, Jeff, at National Mortgage Center, I know you guys are the same at National VA Loans. We're here to help. Our job is to answer questions. We want to give you enough content, right? So you're like, wait a minute, what are these guys talking about? Let me give them a call. So if you have questions about this, the number's up there, 855-699-1424. I may answer the phone. One of our other loan officers may answer the phone. You can always go to nationalmortgagecenter.com. Jason has built out an amazing website there. He keeps tweaking it daily, the mad scientist. I don't know if he sleeps, but lots of good resources for you on the nationalmortgage.com, nationalmortgagecenter.com website. Great calculators. I mean, the amount of calculators that Jason has built is fantastic. So, you know, guys, we appreciate you watching. We always appreciate if you like this content, subscribe to the channel. It always helps us out, right? Share the content if you have somebody else that you know that may be interested in this. If you're a financial planner, if you're a tax preparer, you got to have customers out there that they're trying to increase, right, their net worth as well. A great option if you know people that are self-employed. So anyway, we do appreciate it. Jeff, what do you got? Some final words
One thing,
of
you know, if you're like Jerry and I and you just like to get stuff done and make things happen, go to nationalapplynow.com. Fill out the application. It's a simple, easy download right to your phone, your mobile app, and it's secure. It's all encrypted. You don't have to worry about any kind of information getting out there anywhere else. It'll come right to Jerry or I, and we'll be able to download that, import it, and then one of our specialists will give you a call to go over all your different options for you.
Love it. Jeff, thanks for joining me today, brother. We got to do more of these. These are always fun with you, my friend.
Definitely fun, man. Definitely fun.
I appreciate it. Guys, have a great rest of your day. Again, any questions at all, we'd love to answer them for you. 699, what is it? 855-699-1424. Got lots of numbers going on in the head today. Jeff, as always, my friend, thank you so much, guys. We'll talk to you later, okay?
Take care.
You, buddy.